Hey there folks, coming to you live from my home, from the kitchen table. Going to go over problem 19, practice problem 19, so that you have ready for doing the EOC. As you already know, chapter 18 EOC is not there, so don't worry about it. So here's where it starts off. We have Widmer Watercraft's predetermined overhead rate for 2015 is 200% of direct labor. Folks, all I need to do is keep this in mind later, okay? You might even put it off to the side, put it on the margin. And then we got information about the production activities for the month of May, and all of this is production activity, okay? You might want to copy this off, print this off for yourself so that you have this in front of you while you're going over this video. The second page says to prepare a job cost sheet for each job worked during the month using this type of form: materials, labor, overhead, and total, and the job number for each individual job. And then prepare journal entries, do T accounts, and then prepare a report. Okay? So first order of business is to set up the table. So I'm going to do direct material, direct labor, overhead, total, and I'm going to do it for job 136, 137, 138, 138, 139, 140. Alrighty. Draw a line to separate everything out. That way I've got a nice grid. I've got direct materials going across, direct labor, overhead, and totals. Alright, so we set that up. First thing then is our journal entries. We need to do those. So we start with journal entry number 1. I purchased raw materials on credit for $200,000. So my first journal entry will be a debit to raw material inventory. And remember folks, that raw material inventory, work in process inventory, and finished goods inventory, all three of them are inventory. And so they're basically going to be three buckets, and you're going to wind up putting first into raw materials, which will then spill into work in process, which then would spill into finished goods, and then from finished goods it spills into the fourth bucket, and that's cost of goods sold. Okay, so my raw materials inventory is going to be debited for $200,000, and a credit is going to hit accounts payable, AP. Okay, AP, accounts payable. I got to do my shorthand here. Next journal entry, we have all these jobs that have direct material put into them, okay? So we have total direct material, then we have indirect material for total amount. All 147,500 comes out of raw materials. So the 200,000 that got put into that, out of that 147,500 came out of raw materials and then went into either work in process, or if it's indirect material, it goes into someplace else, and that would be factory overhead. Okay, so my journal entry is going to be a debit to work in process inventory for the direct material portion of it, and that is 128,000. The indirect material of 19,005, that's going to be a debit going into factory overhead. And then the credit, which is 147.5, that's going to be pulling it out of raw materials inventory. So credit raw materials inventory. Number 3. We paid $15,000 cash to a computer consultant to reprogram factory equipment. Well, this person is not factory worker, it's not direct labor, so it is part of the manufacturing process. So I'm going to stop right here because my timer just went off. The 5 minutes is up. Okay.